Hello, everyone. Welcome to another TradeZero Live Session. We are excited to have David Green, expert trader with over 30 years of experience with us today. And today we will discuss about identifying reversal patterns. David will share his expertise on this matter, especially during this kind of market situation. I think that it's important to identify reversal points, and we need David's expertise. We're excited to hear from him. Hi, David.
How are you? It's always a pleasure to be here.
It's a pleasure to have you here. Thanks a million. How was your week? It was ups and downs, lots of things to talk about, I think.
It
Warren
was.
Buffett, yen carry trading,
That's
and
it.
recession fear. I don't know. What else? What else
Everything.
in a week?
Tensions in Israel, just a accumulation of a bunch of stuff that led to, a nice little downturn in the market. We had been talking for a few weeks before this, and I'm sure I mentioned it for you guys here. What's up, Ben? What's up, Arnd?
Everyone.
We had thought that the market was getting a little ahead of itself on the upside. All we did for days and weeks and months, basically, was go up and go up and go up and make new high day after day after day after day. And we would do for some kind of little pullback in the market. You want to call it a correction, that's fine. You can call it a correction. So it started really, and like you said, it was the Japanese trend, and interest rates were doing stuff over there also. So we started where are we? 1, 2, 3, 4, 5, 6. About a week ago, when we've got this first little downtrend in the SPY, right? This first little break. Actually, it was here. From the all-time highs, we got this first little break. We pulled down to a little reversal point here, got a little rally, and then we got another big breakdown. I think from top to bottom, the whole thing was like 7%, a little 7% pullback in the SPYs, the S&P 500. I don't think we had more than a 2% pullback in like a year. I mean, it's been a long time since we had even this much of a pullback. And that's what I call this when this happens. I mean, I see everybody on TV, it's Armageddon. They come on Fast Money, and all they're talking about is we're going to go much lower from here, and it's all over. And they're always wrong. I mean, not 90% of the time, 100% of the time. All right. Most stocks were at all-time highs. It's okay. This is actually healthy when a market does this. It's healthy. It's not healthy to keep going up in a straight line every single day. So when we see something like this, especially me as a technician, my thought, and we're talking about reversals and stuff, is to look for levels on my charts where after a big move down like this could signal a reversal back going in the other direction. And that's basically exactly what we saw. I have my spike. Oh, we'll talk about it in a minute.
Yeah,
that's fine. Get the disclaimer up there. That's fine.
I would like to remind that the purpose of this session is just education. We are not sharing any financial advice to anyone. Also, please do ask questions, everyone in the room. David is always happy. It's hard to find these kind of guys online and, do interactive sessions. So I think you should take your chance and jump on text.
Yeah, guys, if you have any questions about anything, doesn't have to be related to this. I'm here to try to help as many people as I possibly can. Any questions you have about trading, okay, pop them in there. We'll talk about it. Yeah. So when I see things like this happening in the market, my thought is not to run away. It's like when you go to a department store and your favorite jacket's on sale, right? Do you run away from it because it's on sale now? No, that's when you start looking to buy things, when they go on sale, right? Especially if you have a little longer term time frame. Most of the people that we deal with are young people, right? I'm old, so it's a little different from me. I have been getting myself out of this market for the last 6 months or a year, but
you're not old as Peter. He is 500 years old, as he said.
Went to high school with Alexander Hamilton. So, when you get a little older, it's about being more defensive. I don't want to do a 20 or 30% drawdown on my IRAs and all that stuff. It's different. I've been in them for 40 years, so you don't want to see a big drawdown like that. But if you're younger, and when I say younger, anyone below even 50, these are opportunities, okay? These are not things that you run away from. I have been through, 20 supposed crashes in the stock market in my career, 1987, COVID, whatever it was. and the market has made a new high every single time. Not 9 out of 10, 100 out of 100. Okay. So when you get these opportunities, and that's what I call them, when we had COVID, me and Peter were on screaming from the rooftops. This is a generational buying opportunity. You don't get many chances in a market. I think the SPY that time went down to 218, right? So what was that? 2021. So in 3 years from 2018, we've gone up 110%, literally in 3 years, right? So you embrace those opportunities. You don't walk away from them. Also, when you see these opportunities, you don't have to shoot all your bullets in the first shot. You buy a little bit here, you buy a little bit here, you buy a little bit here. This way you have some ammo if things keep coming down. And if you have a long-term horizon, again, we don't give anybody financial advice. Stick to the good ones. Stick to the ones that you know that are going to be here forever, that have earnings, that have decent PE ratios. You know, again, I've been in Apple for 35 years. I've been a long-time shareholder in NVIDIA. Stick to the blue chips, because those are the ones that will always come back, and those are the ones that will come back the fastest when we have these big drawdowns. So speaking of reversals, we can look at it on a longer term time frame, and I actually use reversals for day trading. I use it for both. So what I'm looking for when I'm looking for a reversal on a longer term time frame is going to a longer term chart. For day trading, I'm always trading on a 5-minute chart. I will expand that if I have to know support or resistance on a 5-minute chart. I'll start looking at a 15 or a 30 or a 1 hour. But when I'm looking for opportunities after a big move, whether it's in a stock or in a index, I'm going to expand my time frame. And the longer that I go out, daily, weekly, monthly, the stronger those support levels become. So if I find something on a daily chart, it's strong. If I find something on a weekly chart, it's stronger. And if I find something on a monthly chart, it's extremely strong. So when we were looking at the SPYs, and
the stage is yours if you want to share your screen.
Yeah. Oh, I got to do it. Hold on. Okay. I had it. Yeah, I got it.
Arnie says, I have grown older during the week because of choppy markets.
Yeah. I mean, listen.
Same here. Same here.
It has been a difficult market to trade because we've had so much volatility. So my advice to you who are actively trading in times like this, expand your time frames, let things move more before they get to the levels that you're looking at. I have cut my size this week because it's risk on. You know, sometimes we see in these shorter time frames that things can move extreme one way or the other. So it's okay to take it easy during those times and wait for those extreme moves. That's what I do. You know, I don't do more size when it's more volatile because it's easier to lose money, right? Does David have any social media presence? Any way to follow, contact, learn, from ask questions? Not that I'm allowed to talk about.
Yeah, that's the point. Yeah.
You have my name. You have my name. You can find me, Terrence. I'm not hard to find. So, again, I want to show you guys a stock. Most people probably know what this is. It's called Salesforce.com, right? CRM. Okay, let's see if we can get a weekly chart up of this. Let's see if we light up. Here it is. Okay. So check this out, guys and girls. These are the kinds of patterns I look for a reversal on a longer term time period. Okay. And if we look at CRM, the stock went from a price of 320. Check this out, guys and girls. And this was last week when this hit this. Mm-hmm. It went to a low of $203. $203. Okay. We happen to have, based on my technical analysis, and my technical analysis is I use a 9 EMA, 15 EMA, 30 EMA, 65 EMA, and a 200 EMA exponential moving averages. Okay, so I'll share that with everybody. That is what I use. There's a lot of nuances involved in how to use them and when to use them, but those are the ones that I use. So we had this CRM, and they had very bad earnings, or supposedly bad earnings, came out last week. And the stock went from, in 1 week, $300 to $200. And based on my technicals, if you look at my 200 EMA, which is my strongest EMA, and now I'm on a weekly chart, That's where I expected to have a reversal. Okay. So we went down this stock went down almost 50% from its all-time highs. Salesforce.com is not going anywhere. They're not going out of business. Okay. They're going to be here for a long, long time. Right. So when we approach these levels, going down to my 200 EMA, and guys, I did not, make up this chart and then go through that line in there. This is sitting here. As this was coming down on a weekly level, so this, guys and girls, I suggest putting these moving averages in. You don't have to use them. This is what I do. This is what I look at. This is what works for me. Everybody uses technical analysis, that is for sure. Different ones. So, and also people can use the same technical analysis and still come up with different results once they get into a trade, right? So now we have a weekly chart of the spiders. Okay, this is a weekly chart of the spiders. And on our weekly chart, you can see, no, this is not right. Hold on. Let me go daily. Let's get the daily. Here we go. Okay, this is a daily chart of the spiders. And we were watching it this day. And again, I have my 200 EMA, okay, on a daily chart, which is a powerful weapon. The low of the spiders this day, I remember it to the penny, was $506.87. And if you look where my 200 EMA was, it was $506.74. So we were watching this after going down 8%, and it missed it by 13 cents, okay? 13 cents. And from 507, we went up to 531 in literally 5 days. So again, a 200 EMA on a longer term time frame can really signal a nice reversal in stocks. It's a place to look to see that reversal, especially when we have a big down move. And what we've done in the last 5 days, oh, by the way, let me point this out. The day we did this, okay, this is the day the Dow was down over 1,000 points. The S&P was down like 3 or 4%. QQQs were down 3 or 4%. Everything was down. On Fast Money that night, I don't know if any of you guys watch Fast Money. I'm sure some of you do. It's a show that they talk about the markets, right? Everyone on that panel said we're going lower from that. Every single person. This is Armageddon. This is the markets are out of control. We're going down another 1,000 points from here. 99% of the time when you hear people talking about that, the exact opposite is going to happen, okay? They've already missed this whole entire move, and now they're saying we're going to go lower from here. But in the last 5 days, we've rallied up 25 points in the S&Ps. And even today, you can see where we are today. I'll go back to the 5-minute. We're sitting up against little resistance levels here now. So my moving averages that were support and now resistance was sitting up right against my first trend line. All right, let's go back to the 5-minute now. See exactly where we are. Okay, let me make that bigger. Okay, so we're sitting right around this 531 level, which is a little daily resistance level on my longer term charts. And we're hanging around and we're having a little trouble here. After this gigantic move up, it would be healthy if we can consolidate here a little bit, okay? And then start working our way back up towards, hopefully new highs. Will the market make new highs? Yes. How long will it take? I don't know. I have no idea. But I know that every time in history we've had a so-called crash, it has made new highs, right? So again, for your longer term investing, there's no such thing as a crash. For shorter term trading, guys and girls, I will use my moving averages to signal shorter term reversals, okay, when I'm looking for trades. Let's try and kind of see if anything's set up for us today. Let's see. Okay, so like when I'm looking at NVIDIA, right, and we go from a low down here to a high right up here, and we hit one of my resistance levels. This is on a shorter term time frame that I would look to short the stock. We went from a low here to a high here, hit my 65 EMA, and you can see what the result was after that. So even for my day trading purposes, I will use my moving average to find reversals, but on a shorter term time basis. That's it. So I'm really using the same methods, whether I'm looking for a longer term trade or a shorter term trade, right? This is Meta today, okay? And if we look at Meta today, if anyone can recognize and tell me what kind of pattern this is in an uptrend, right? We started down here this morning. We've gone up every time we went down, we went up. We went down, we went up, we went down, we went up, we've gone down. We'll see if we go up again. So this is a pattern that I call a trend trade, okay? This is one of my favorite patterns that I look for because sometimes when a stock is in a trend, it'll stay in that trend the entire day, right? So when we get into a trend trade, and I'll get in again, this is technical. This is when I use my 9 and my 15 EMAs. They are the weakest of the moving averages. The moving averages all go in strength, and this is a good example laid out here, right? My 9 and my 15 are only going to work when the stock is in a trend. That's when I use it. That's when I get into the stock when it pulls back to my 9 and my 15 EMA. If it breaks those moving averages, then the trend is broken and I get stopped out of the trade, even if it's a longer term trade. Then you can see here we have our 30 EMA, okay? That would be my next support level when the stock is going down. We have my 65 EMA, the next support level going down, and then we have my 200 EMA, the next support going down. The further something goes and hits one of our support levels, the better the trade will be. And the faster something goes and hits one of our support levels, the better the trade will be. So we're just watching this now. We're trading at, $513. So to me, and all I try to do in all of my trades, okay, is try to put the odds of that trade in my favor of work. And that's all we can ever do, right? So by using my technical analysis, I'm trying to put the odds of that trading working in my favor. The further it moves, the better the odds are going to be that that trade works, right? So right now we're trading at, let's say, 513.50. Well, I have a moving average at 512. That's down $1 from here. Could it bounce from there? Maybe. Is it great odds? I don't think so. I want it to move further from there, right? So I have better odds of this trade working. Well, my next one is 510. Okay, I'm down with that. To get to 510, we'd have to go down over $3. That is a trade that I would look to make because now we move down $3 to hit this level. I'd look for it to hit, have my stop order below, and take profits as it turns from there. And down here, guys and girls, this is 507. Now we're down $6, okay? The odds have just improved from maybe this being a 60% trade to a 90% trade. So I'm always going to try to be where the odds are in my best favor of this trade working out successfully. And still, with all these things that we do, we have losing trades, okay? Yeah. Everybody, especially in this market, right? This market has just been whack-a-doodle with volatility, which is a trader's best friend. I don't mind volatility. And what I'll do in times like this is I won't worry about the close one, and I won't worry about this one. I'll worry about the one that's furthest away that gives me the best odds of that trade working. And if it gets there, that's wonderful. If it works, great. If not, I'll have a stop order. I have a stop order on every single trade that I do. So the further, and another most very important thing about especially day trading now, guys and girls, is speed. How quickly does it get to one of these levels? Because the longer it takes to get to one of these levels, the less effective the trade is going to be. If this just kind of crawls down here, pass. If we hang around here and then crawl down here, pass. Even if we start sitting in between here and going really, really, really slow, pass. I want speed. The faster something gets there, the quicker the stock will reverse from one of those levels. So whether we're looking for long-term reversals or short-term reversals, I'm still always using my technical analysis, okay? For my longer-term reversals, most times I'm going to use an option trade as close to the price as it is and as close to expiration as it is, and take profits if it works from there and have our stop orders if it doesn't go down, if it does go down from there. So both ways. I use it for day trading and for swing trading. I call it swing trading when I'm looking at those longer term time frames.
In terms of this example, David, if the price goes down to your 200 EMA, do you wait for any confirmation or no?
That's a great question. Okay. That is a really, really good question. The answer is no. My confirmation is my 200 EMA. Okay. A lot of people will wait for that confirmation, okay, which is all right. It's not bad. But what if you have a really fast-moving market? Okay,
most of the time I
all the way down here. Yeah, spikes all the way. It hits our level and quickly spikes up $1. So if you're waiting for that confirmation, I'm already selling part of my trade at a profit, right? So my confirmation is my moving averages.
Yeah.
And that's a great question. A lot of people who have been with us and who trade with me say, why not wait to see if it's going to work? First of all, I don't know which trades are going to work and which ones aren't.
Right.
Nobody does. Nobody does. I only know by using my technical analysis that it puts the odds in my favor, especially if it moves further and faster, right? So I don't wait. That is my confirmation. The lines on my charts are telling me where to get into a trade, so that's where I get into my trade.
So in that case, to make it safer for ourselves, setting the stop order tighter to 200 EMA is should be more important in this case because it can go down or sudden moves.
Yes, you have to give yourself some room. Yeah, on every trade that you do, think about it. Are we ever going to pick the exact price something stops going up or stops going down? No, nobody can. Okay, on a rare occasion, maybe it'll happen, but more often than not, it's going to go down a little before it goes up. It might go up a little and go down a little bit, but very rarely are we going to get the exact spot. So we base our stop orders on the ATR. Okay, the ATR is the average true range of a stock. I'm saying in Meta, it's probably around $1 or $1.50. So if I get into this trade, I'm going to use the average true range to put my stop order. If it goes below that by that average true range, whether it's $1 or $1.50, I'm out of the trade. It didn't work. I might look again to see if it holds that level and try it again, do it the same way, okay? It's very, very important to use bracket orders, guys and girls, right? TradeZero has bracket orders, okay? What a bracket order is when you get into a trade, it automatically puts in your stop order, you set it for what you want it to be, and puts in at least your first profit take when it starts going in your direction. I like to use a two-tier a bracket order. So what I'll do is I buy it here, I have my stop. That doesn't change. I look to make profit, let's just say 50 cents is my first profit, $1 is my second profit. If it quickly goes up 50 cents and $1, it is taking me out of 2/3 of my trade. Okay? Good. I'm in the profit. I'll raise my stop order now so I cannot lose money on that trade and see how much more I can get on the last third of my trade. I always want to hold onto a little bit of my trade after I've taken some profits to see how much more I can get out of it. This way, when I have a losing trade, okay, my winning trades are going to way outnumber the risk on the losing trades. But I'm a big believer in putting money in the bank, guys. Big believer. Give me 50 cents, give me $1, raise my stop so I cannot lose money now, and let's see how much more I can get out of it, okay? A big mistake that a lot of traders do, number one, they don't use stop orders, and that's how you blow up a trading account, right? You don't have a stop order, then you're hoping and praying, and hope is not a strategy. And listen, I've been there, guys. Everybody who's ever traded has been in a trade where they're actually praying to God that it goes the right way for them. Please, God, just let me get out of this trade, and I promise I'll never do this again, right? We have all been there, okay? Don't be there anymore. I'm going to have losing trades. Anyone who tells you they don't have losing trades is just lying to you, okay? Losing trades doesn't mean you're a loser, and it doesn't mean you're a bad trader. It's the cost of doing business. That's it. It's the cost of doing business. But I want to take profits and then raise. I don't want to ever turn a winning trade into a losing trade. That's what I don't want to do. I don't want to ever turn a winning day into a losing day. How many of us has had a great morning and gave it all back? And at the end of the day, you want to take some cyanide or something. It's just the worst feeling in the world, right? It just is. You do it on a Friday and it ruins your entire weekend. Yeah, exactly. And don't overtrade, okay? Wait for trades to set up. Good traders should be, I say this to every time we're here, good traders should be bored most of the time. That's the bottom line, all right? Don't invent things that aren't there because you're bored. Right? Trading out of boredom is also a recipe for disaster, right?
Arn says, do you take the number that is shown, ATR, or do you double the number for brokerage or stop? I actually asked this question to you. If the ATR is too low, are you adding a dollar or what's your strategy on it?
I'm not going to trade in stocks where the ATR is too low. Think about it, right? If I see a stock that has a 50-cent ATR, that's basically telling me that max profit I'm going to make on that trade is 50 cents, right? So I don't want to be in that trade. So, we're not usually on not trading stocks that don't have at least $1 to $1.50 to $2 ATR, at least. This way, when I get into a trade, I know there's some room for me to make money. So if the ATR is 10 cents or 20 cents, yeah, there's no reason to trade. Go look at Bank of America, right? The ATR in that stock is about 2. It never changes because it's so thick and it's a cheap stock, right? So yeah, I want at least $1 to $1.50 ATR. Otherwise, it's not worth trading, right?
Makes more sense, yeah. Ben was at that point as well. He says, I have prey traded, that's for sure. But
yeah, we all have.
Most of us, yeah.
We all have, and it's a horrible feeling. It's the worst feeling in the world, right? I'll tell you this is a mistake a lot of traders make too, okay? And I've done this in the past, everyone has. I could be in a bad trade, right? And then it gets me back to break even, okay? Get out of that freaking trade. Get out of that trade. Don't think that's going to turn into a big winning trade now, because I've been in some losing trades before I had my patience and discipline that got me to break even. And I said to myself, okay, here we go. Boom. We're going to start going now. And it immediately turns from there and puts me right back into that bad position. So having a losing trade turning into a break-even trade is not the worst thing in the world. I will do that sometimes. If I just bought Meta on my 30 EMA, okay, and it goes 50 cents against me and my stop is $1, and then it gives me a chance to get out break even, I'm just going to get out of the trade, move on to the next trade. I don't care if it then goes up $3. I was losing, now I'm even. Scratch it off. Let's move on to the next trade.
Well, my biggest issue is not actually the stop orders, is the big spreads. I mean, I've been always chopped off by the big spreads because I'm following momentum and small caps. So most of the time I've been chopped, even though if I get the spike, it's already my entry point. So what I have it's zero. So either I lose or got zero. No more.
Well, here's a good answer to that. Don't trade anything that has a big spread.
Yeah, yes.
It's true. I mean, look, if I'm trading NVIDIA or Apple or Meta or CRM or the Spiders or the QQQs, they have 2-cent spreads, 5-cent spreads, 8-cent spreads. I don't want to be in something where I hit a market order and I bought it up $1. You're in a bag already, right? Then it's got to go even higher from there before you can even think about starting to make money. Yeah. So, or limit orders, man. Limit orders. If it hits my 99% of the orders that I use are limit orders. If this happens, I'm getting in a trade. If it doesn't happen, I'm not getting in a trade. I will do momentum trading. I love momentum trading. Okay. But it's got to be in a stock where I don't have that big spread.
Yeah.
Because I don't want to try to grab a breakout and pay too high for it.
I learned an expensive lesson for
that.
Huh? William says, I made a green red day yesterday.
Yeah, Bill, we have some steadfast rules that you just have to follow all the time. The rules are easy to learn. They're not easy to follow. That's it. We're human beings, right?
After each session, I'm saying, okay, I got this. I need to, practice this one. And
yeah, listen, I make my people, and I tell you, I make them leave if they hit their goal for the day. I ban them from the room. You're not allowed here anymore. Get out of here. You're done. That's it. It's hard to make money, right? And when I make it, I want to keep it. Okay. Yeah. When I make money, I want to keep it. So if you have a little goal, whatever that is, $50, $100, whatever, it doesn't matter what it is. When you hit that goal, get your ass out of the trading chair. Go do something else. Life is short, guys and girls. Okay.
Yeah.
The most precious commodity in the world is time, and we ain't getting it back. Right. So make a couple of bucks and go do something else. That's what I preach that to everybody. And I will never turn a winning day into a losing day. I just won't do it. And I tell people to do this, and I don't even like it. Kick in the 20% rule. If you're really sick and you have to sit here and keep trading, I don't recommend it. But if I'm up $500, okay, if I give back 20% of that, $100, I am absolutely done. Done. That's it. The problem is we have to do that. There isn't something electronically that's going to do that for us. That's the problem. And then you got, the angel and the devil on your shoulders, the trading angel and the trading devil. And the devil's going to say, I lost $50. I'm going to make another trade to try to get that $50 back. And then you lose another 50 and another, and before you know it.
Endless. Yeah.
You do it on a weekend and it ruins your whole weekend. Right? Definitely. So the strict, I'll give you the rules right now. Okay. It'll take me 5 seconds to give you the rules that I follow. Have a stop order in every single trade that you do. Don't change it unless you're raising it to lock in profit. Boom. Don't average into trades. Averaging into trades is a recipe for disaster. Okay. When something hits one of my level, I buy my full amount of shares. It's going to work or it's not going to work. Know when to stop when you're losing money. Some days it just doesn't work. If I have 3 losing trades in one day in a row, I'm done trading. It was a bad day. I'll come back from a bad day. I'll come back from 2 bad days. I don't think it's ever happened to me 3 bad days, but I'll get that back. It's not going to be a disaster. And never turn a winning day into a losing day. That's it. Those are the rules. That's the Bible of trading. Easy to say, hard to follow.
Yeah, we should put on the wall, actually.
Yeah, people don't trade because of technical analysis, guys and girls. I can teach anybody the technical analysis that we use, and I mean anybody. And I've journaled thousands of trades that we've done. We're between 78 and 81%, whatever it is, for all the trades we've ever done, okay, which is pretty damn good. I know my hit rate. I know which trades work better for me than other trades. You know, these are all the things that you have to do if you want to make this your business, or even if you're doing it part-time, right? If I don't know how many winners I have versus losers, I can't trade. How do I know? I got to keep a journal. I got to know my hit rates. So I know people with a hit rate of 90. They make money on 9 out of 10 trades, and they're losers. How is that possible, right? Well, because they make 109 times and they lose 5,000 one time. That's how. Hey, guys, I have a 90% hit rate. Woohoo! Yeah, well, I'm still a losing trader. So the hardest part of what we do is, but people do not fail because of technical analysis. They fail because of a few things that we just talked about. That's it. Truth.
100%, yeah. Yeah. Arn says, I put the message, be patient, next to my computer.
Right. Yeah, Art is part of our group. Art, have you seen any improvement since you joined us?
Definitely, yeah. I have no doubt of it. Well, actually, David, we're coming end of our given time for today. I was going to actually ask you the golden nuggets, but you throw a bunch of them. But if you'd like to add anything for today's session, we can close with that.
Yeah, I mean, I would just say, guys, if you're actively trading, okay, just be more patient. Wait for levels further out. This market is just, it's insane. You know, what used to take, good on. I remember when me and Peter were trading on the floor, you know, if the SPY went up 2 points, it was a big day, right? Now we move 40, 50 points in 10 minutes, okay? And look, this market isn't the same as it was 3 weeks ago, let alone 3 years ago or 30 years ago. Right? For the last 2 or 3 weeks, the volatility has been incredible. Yeah. Absolutely incredible. And you got to adapt. It's that simple. You got to adapt, be more patient, be more disciplined, and just relax. And don't beat yourself up if you're not doing so good. Just figure out the right way to do it. Be kind to yourself.
Thanks for that, David. Appreciate it. Thank you, everyone, for joining us today. I hope everyone gained valuable knowledge and enjoyed today's session. Have a great weekend and stay tuned for more TradeZero Live Sessions.
See you guys next week. Loves to all.